Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite, we have Kinahan. He's the chief market strategist over at TD Ameritrade with the monthly IMX reading. Great to see you as always.
Always a
Happy
pleasure,
New
Jill.
Year.
Happy
All
New Year.
right, the IMX still in a downward trend for the third month in a row.
Yeah, and I think it reflects what went on in the fourth quarter pretty well. People are a little bit afraid. We had the crazy rally on Friday, but overall, people are a little bit afraid still to have as much exposure as they had in the past. We saw our clients be, although they were buyers of things overall, they were net sellers of equities. So where they were buyers are things like ETFs, some bond funds, some bonds itself, even maybe some puts to protect their position. But the straight equities themselves, they were actually net sellers of for the month.
I think that's really encouraging because the 11.5 million TD Ameritrade clients, they're staying invested in the markets. And I find that really encouraging regardless of what asset class.
No, and it's fantastic. And I agree with you, obviously, for our business and for the health of the market overall. It's not like people are like, oh, my God, I have to get out. And it's one of the things we talk to clients about all the time is all in and all out are really bad decisions normally.
Yeah.
So if you want to listen some of your exposure, that's understood. If you want to increase some of your exposure, that's understood. But saying I have to get rid of everything right here is usually a really bad decision.
All right, and where were they net buyers?
Well, for net buyers, it's kind of interesting overall in what they went to. Apple, again, as Apple just got pounded. People just have a great interest in that. It's been the number one held stock at the firm the last couple of years, although they were net sellers for the year of Apple, which is interesting to me. AT&T. AT&T got smacked around a little bit, and of course, that's one where people I think also are like, okay, in this time of uncertain interest rates, getting a very nice yield with a blue chip company. And GE is always an interesting one to me, as it went sub $7 in December. We saw people really start to step in there again. That's one that I think that people they have faith that somehow they can turn that.
Well, it's interesting. They were ahead of the street. You just got to upgrade this morning.
Yeah.
So, I mean, retail traders are certainly ahead of the street there. Net sells.
Twitter, which was actually driven a lot by our millennial clients, which is pretty interesting. Facebook was another seller, and Alibaba, which if you remember, they were buyers of Alibaba in like June.
Right.
Sellers. Pardon me, in September. We haven't really seen it in there since, and now sellers again at the end of the year.
All right, let's get your 2019 market outlook. Q4, particularly December, was a shock for investors, I would say.
Absolutely.
Going into Q1, I mean, how are you feeling? Because we're still getting those like wild swings every day.
I think the first quarter really comes down to what we're going to get more news on tomorrow, and that is the tariff situation in China. That, to me, is the number one story as we head into the first quarter. And the reason being, and the reason we're seeing elevated volatility, is if I'm a CEO, I'm going to find it very difficult to make plans right now because I don't know what it is. Even if they come in at 25%, now I know the rules. Now I can go out and make a plan. Right now I'm going to find it very difficult to make a plan. So I think that that's going to continue to be a little bit of a drag until we have some sort of certainty there. That's the number one thing on the market outlook. What comes from there, we'll have to see. If we're at 25%, we may sell off. What we often see in those situations is it gets overdone, no sell-offs. And if it comes out at a 0 or a 10%, I think we could see the market, it could be the impetus to start a rally for the year. I expect that the higher volatility will continue throughout the year. So 20 being an average or over the last 10 years, basically. So 20 or higher would be where I would think we're going to continue to see volatility. So it's not going to be this year we saw in like a 2017 where we kind of go straight up and volatility dissipates. I would expect volatility to hopefully not to the level we saw in December where every day was just crazy. But I would expect volatility to be on the increase. What does that mean for you as an investor? It means you probably have to, if you're going to put in stop orders and sell orders, you probably have to spread that out a little bit because the expected move of your stock will be a little bit higher.
I mean, if you're a value manager, you have to be a little bit excited about, the way prices have reset themselves. Yeah. But do you think that the market is disconnected by how strong the economy and earnings have been?
Well, it's interesting. I kind of thought that, but then we got this news out of Apple. And so now I think that what the market and what everybody in the market is trying to decide is this an Apple story in terms of the slowdown because you're selling a $1,000 phone? Because, you look at the retail sales season for December, it seemed awfully good. Anecdotally, everywhere I go, every restaurant, et cetera, seems to be crowded. We got some evidence of that. The employment report with restaurants and hotels being the number 2 area where we created jobs. So again, I don't know that it's necessarily disconnected because the market's supposed to be forward-looking, and if you're forward-looking, you say this China situation could have a big factor on whether we slow down or go forward, and taking the more conservative side of it, actually I think the market's doing a pretty good job on that side until we have more positive news.
All right, well, let's keep those investors invested. Thank you, JJ, as always, for joining me.
Always a pleasure.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.